smart way. During today's event, you will be learning about the modern day investor and finding financial freedom. You'll also have a chance to ask our money expert panel your burning questions during the live Q&A. And then together with public.com, we've conducted a study with over 3,000 US adults to uncover how today's investors behave. And Katie will be, from Public, will be going through the results shortly. But for now, I'm just going to run over the agenda and rules. Okay, so the agenda today, you've got introductions, you've got the discussion and live Q&A, and then the rules. So remember to introduce yourself in the chat, ask and upvote questions in the Q&A. And then when you're asking questions, unmute your microphone. And when you, and then the last part is you will be emailed the recording next week. So today I'm going to hand it over to Katie. Here we go.
Great. Hey, everyone. We're going to keep this upfront piece short because I really want to focus on Tiffany and Dominique's perspectives. But great timing for this event today because we just launched the survey results. And as Michelle mentioned, this was a very comprehensive study of 3,200 US adults. And we really just wanted to kind of understand their behaviors and attitudes around money overall, but specifically investing. And I know we have a big international crew here, so I'd be super interested in the chat as we go through to hear kind of what you all are seeing, where you're from, and how it might be similar or different to what we're seeing here in the US. But why do we do the survey? I think first of all, there's just a lot of myths and misconceptions about investing, about personal finance. You'll read one thing one place, you'll hear something somewhere else. So part of this, we just kind of level set and understand how people are thinking about these topics. Secondly, I think just like getting these conversations out in the open and hearing or seeing at a macro level how other people are experiencing the same things you are can help remove like a psychological barrier to entry. So even just knowing that, you know, if you're in the 20% of people that were over 30 when you learn, just knowing that, you know, it's not just you, I think can help a lot. And then finally, you know, Public's a community-based tech company. Finimize is an amazing community and media company. And we're just both always listening and looking to feedback from our communities to help us inform our own products. So we'll be using the insights from the survey to kind of optimize moving forward as well. So real quick, I just wanted to highlight some of the top findings. These are all on a microsite that I'll share the link later. But the first topic we asked was corresponds with the poll question. And we just wanted to know if people talk about investing with friends. At least here in the US, there's this historical taboo around talking about money. It could be seen as rude. And some people just historically weren't doing it. What we found in the study is that most people actually do talk about investing with their friends. And if you look at the age trends, younger people are much more social when it comes to having these conversations. And you see this elsewhere with, you know, stories about people being transparent about their salaries in order to kind of benefit their own negotiation where they work. And so there's kind of a movement with younger people that these things are just more out in the open. And that's a good thing because we can talk through things together and learn from each other. The second thing we wanted to dig into was if you have questions about investing or want to talk about your investments, we asked, where's the first place you go? And the number one answer was friends, followed closely behind by community. So those two together show that this is a social thing. People are going to their peer networks to talk about these topics, even more so than their families in most cases, which that one was surprising to me. I thought that would have been higher up. And coaches and advisors, again, the least referenced primary source, people said when they talk about investing. Again, tying to the poll question, we also asked, how old were you when you first learned? In the US, personal finance topics are not typically taught in schools. And so people are kind of, you see learning later on, maybe they're out of college or getting into even, you know, their 30s before they understand these concepts. And if you notice on the chart, women are more likely, far more likely to say they learned after 30 than men. And then when we kind of dug into not only what age you were, but where did you learn about the basics of investing? This one kind of was really surprising, that the vast majority of people taught themselves, which if you think about it, makes sense. There's not that formalized instruction in school. Some people, this is not a normalized behavior in their family. And so people are kind of taking a self-directed approach, and they're learning from their, themselves and kind of navigating that alone, as they first learn about these topics. And then we wanted to understand kind of, what's stopping you from growing your financial literacy even more. And the top two responses were that, one, people thought, I need a professional and I can't afford it. The second one was they just weren't sure where to go. And I think the second one's interesting because as we have a more democratized kind of financial news environment, there's great platforms like Finimize, there's, the traditional platforms, there's social media, there's apps. I think some people, they struggle with knowing, okay, what's the right mix for me, or where do I go? And again, women were more likely to say they weren't quite sure where to go to get that information. But interestingly, the least popular response was saying that people didn't feel comfortable talking about it, which kind of corresponds to the earlier stat that people are generally comfortable about talking about these topics. And then we also dug into what factors come into play when you make an investment decision. So across all the cohorts, financials and product were the top two and pretty consistently picked across all the age groups. Interesting trend among younger people, especially the 18 to 29 group, were much more likely to say they invest in a trend or sector, and also in a company because of their values. And so you're seeing that little more idealism with the younger crowd. And it'll be interesting to see if and how that changes as they age. So that's just a sneak preview. We're going to be diving into these topics in the coming talk. But if you want to see all the data, there's the website. If you are based in the US, and I apologize to people who aren't, if you are based in the US and you don't have public yet and want to give it a spin, use that link and sign up, and you can start investing with $20 on us. And when you get the app, we love your feedback. So get the app, tell me what you think about it, email me, and I'll send you one of these hats, which are a very hot ticket item, and you can't buy them anywhere. You have to earn them, is what we say. So send me your feedback, and then we'll go from there. And with that, I think we're ready to dive into the panel. My screen's off, right? Yeah. Okay, cool. Awesome. So we have two amazing panelists, and I'm looking forward to shutting up to hear from both of them because they have amazing insights to share on all these topics. So first we have Dominique Broadway. She's an award-winning personal finance coach, speaker, expert, founder of Finances Demystified. And so she's here to kind of help break down these topics for you, as well as Tiffany Thomas, who's a wealth mentor, founder of Wealthy Tiffany. And so welcome, guys. How are you doing?
I'm good. Thank you so much for having us.
Yeah, excited you're here. So I know it's interesting. We just looked at the numbers, and sometimes numbers are interesting, but I always think like stories are more interesting sometimes. And so I would love to dive in with kind of your own stories about your journeys, just given that you've built careers in navigating personal finance, investing, similar topics. And so for you guys, and we'll start with you, Dominique, how did you first kind of learn about the basics of this stuff? When did you decide you wanted to build a career from it? And what did your journey look like?
Yeah, so I realized at a really young age that I wanted to be in finance. I wanted to specifically be a stockbroker. I realized that when I was like 13 or 14. So I've always been a finance nerd, but essentially, like I said, I figured that out really early, and then really went to my family for advice and saying like, hey, how do I start investing? And they admitted that they didn't really have tons of knowledge or information about it. I remember my grandfather and even my mom saying, hey, like you can look at my 401k statements and see if you can make some sense of it. So that was really when I just started literally digging in and reading prospectuses and learning about mutual funds and trying to figure out how I could start investing, because I realized there was pretty much two ways that the rich were building wealth. One was through real estate and the other was through investing. So that was really when I just, like I said, went head in and just started learning all that I could learn about investment.
That's great. So in school, nothing, sounds like.
Yeah.
Not part of
Yeah. So I mean, in school, so in college, I majored in banking and finance. So they did teach you, a lot of the investment basics and things like that. I feel like I didn't really dig in and get more formal knowledge until I really started my career. And so I was working at a major wealth management firm, UBS Financial Services. I interned there in New York, but also worked there full time and became a licensed stockbroker. So I was managing wealth and creating financial plans for people that had $10-20 million in investable assets. And then even after getting my dream job is when I realized that there was just this huge gap, right, of like the super, super wealthy that had access to information. And then the people who not necessarily, just weren't wealthy, and so they couldn't get access to that financial information. So I had bought my first house at 22 before I graduated college, and my friends were like, whoa, what were you doing that we weren't doing? And so I'm like, wait, you don't have this basic financial knowledge? And they're like, no. I'm like, okay, so there's a market for this. So I literally just ended up quitting my job at an investment firm and starting my company to really bring information to people that want access to financial education and information, but don't necessarily have the millions and millions of dollars that a lot of firms traditionally needed to have to take them seriously. So that was pretty much how I got started and how I got to where I am today.
Awesome. How about you, Tiffany? What did your kind of journey look like, and when did you kind of have that similar moment as Dominique did, that you knew this was something you were really passionate about?
Mine was a little bit later than hers. I was not 13 or 14, but I kind of had like a good understanding of finances, just like budgeting and saving money, but not so much investing. So it wasn't until I was in my 30s, actually early 30s, until I started thinking, oh my goodness, like I need to really start investing my money. I was really good at saving a lot of money. And I did buy my first house like when I was 25. But I wasn't really in that investing mindset until in my 30s. And then I helped a couple of my friends with their budgeting and just getting better at their finances, and thought, oh, you know what, I can start a blog and just kind of help people with this. It was just something that started to become a passion of mine. And as I started learning more about it and investing myself, I invest in real estate. So I have 4 properties. And, I started investing more in the stock market, buying like individual stocks, and then, just kind of expanding my knowledge. And I thought I can really help people with this. And so I decided to actually quit my full-time job. I was doing marketing and started my own business, helping people learn how to manage their money better and learn to invest it so they can become financially free and retire when they want to.
That's great. So it seems like both of you spend a significant portion of your days talking to people about money and their finances. And so I'm super curious to hear from you all about just talking about money. Is this still something that people kind of get that pit in their stomach where they don't feel comfortable talking about it? I know growing up in my family, you didn't talk about money. It was definitely seen as like rude. And so when is it okay to talk about money? Are you seeing in your clients that people are opening up more, or is there still that trepidation to share? Tiffany, do you want to start?
Yeah. So with the clients that I've had, I think they're more in a spot where they're more willing to talk about money. And sometimes it takes a little bit of time to get them to fully open up. But I feel like where they're reaching out to me, that they're kind of ready to do that. But with talking to people in general, I feel like there's still a lot of trepidation there, and they're not quite willing to open up as much. But I don't know, with the younger people, I feel like they're moving in that direction to talk more about money, which is fantastic, because that's what we need to be doing so that we can learn from one another and become better with our money.
Yeah, I think some of it comes down to confidence. And if you don't feel necessarily confident, you're scared. People don't want to sound, uninformed. And that's where they get that fear. And as you grow your confidence, I think sometimes it gets easier, but also as you talk to people and understand that like not many people know everything, and there's a reason there's experts like you guys. Dominique, do you have similar experiences with people, and kind of what are you seeing on the ground?
Yeah, for sure. I mean, I think people are, when it comes to money, it's a very taboo topic, right? People are so scared to talk about it. But I think lately, I will say even this year, I feel like everyone's talking about money all the time, right? I feel like, I always tell people like it's better to have financial conversations when you want to versus waiting until you have to, right? And so I feel like lately everyone's talking about money, everyone's talking about investing, everyone's just trying to figure out how they can change their financial situation, especially during this pandemic. So, but I definitely agree. Before, I would say this year, it was a very taboo topic. People will talk about anything before they talk about money. I was raised to talk about money very openly in my household. So it's something that I was always very, like I said, I talked about all the time. Like I talked to all my friends about money, even when I was dating. Like I knew how much all my, boyfriends made or whatever. Sometimes they were probably just trying to get financial advice, but essentially it was just a topic that was freely discussed. But I think people realize it's one of those things that the more we talk about it and we share our experiences, we share our failures when it comes to money, it makes it so much easier to, that we can all kind of do better with our finances collectively, and we can learn from each other's mistakes.
Yeah, I think right now I feel like it's, like you said, it's very top of mind because the market's volatile. There's a lot of economic pressures and people are thinking about this stuff because it's real and it's like right in front of them. So I think I was talking to someone a few weeks ago who works as a financial advisor, and she's like, on one hand, it's kind of good because people who weren't sort of paying attention are now starting to really think about these things.
Yeah.
She said, on the other hand, like you said, if it's already kind of in this state of volatility, it's not that it's too late. It's just like, it would have been better to be thinking about this before. But we've even seen, there's studies that show business news is the fastest growing, vertical of news above like politics right now. Obviously sports, there's not much going on there. But people just have more interest, which I think net is like good that people are curious about this kind of thing. I'm sure Finimize likes that too. So I want to pivot to the next one because I feel like this is like a meatier question, but it's something that everyone always asks, especially we see it a lot in our app. So Public's a social investing app, so you can kind of share ideas in there and people ask each other questions. And a lot of questions people ask when they see someone else make an investment is like, why? And why did you pick this stock? And what are kind of the check boxes for an investment that you go through? And so I know we want to talk about investing more broadly, but whether it's stocks or real estate or any investment, curious what kind of criteria you guys apply before doing that or before assessing. Dominique, do you want to start either at the broad level or for a stock in particular? How should people think through that decisioning?
Yeah, I mean, I think, I think it's always great to look at the company's financials, right? See how they're doing. Also, I think a lot of times people will invest around earnings calls, right? When they know that a company's going to be releasing their earnings, or sometimes people will even invest when they know a new product is being released, so there may be, an increase or decrease in the stock price. I recently bought some options or sold some options on Wayfair. Well, I guess bought some Wayfair puts because I thought Wayfair's price was going to go down, and it did, right? So I was able to make money that way, and then I was anticipating Wayfair going back up just based on all the news that was out, and I was able to make money by buying Wayfair calls, right? So I think also, in addition to looking at the company's financials, it's also really important to keep your ear to the street about certain companies and hear what's going on. The news does move the market. The public can move the market as well. So I think those are a couple things that I usually look at when I'm making various, investment decisions. And also, I think just looking for companies that I believe in, companies that I use. I think we are all very familiar with a lot of the brands that we frequent. If that's, Apple or Google or, those are just some of the big names. And because we frequent them, we are very familiar with what they have going on. So I think that's always a great place to invest. And I think finally, I think kids are some of the best stock pickers, honestly. So I remember years and years ago, my little sister, I went to pick her up from school when school was like, a thing. People were still going to school. We pick her up from school, and all the kids had on these Heelys. And I was like, oh, what are these? And she's like, yeah, everyone has a pair, and da-da-da, I have a pair. And I'm like, okay, cool. And I was like, okay, let me go buy some stock in Heelys, because if everyone's making their parents buy them these shoes, obviously the price is going to go up. And it did. It worked out, and I was able to, make some money off the Heely stock. And I sold them when I realized her Heelys were sitting in the corner and she wasn't using them anymore. So I think sometimes like we overthink investing, but sometimes we can just kind of keep it simple, and kind of see what's going on around us.
I think there's something to that. So I'll just caveat, I'm not a financial advisor like you guys are. So, but I've noticed there's been times even when I'm talking to people in our app that I learn things like I as a consumer stopped using Snapchat 5 years ago. I'm like,
yeah.
I was on to the next thing. I'm like, I'm too old for this. I can't keep up. I don't know how to do the filters. And this woman was like, I have a teenage son, and she's like, this is how teenagers message each other. Like, this is their primary messaging platform. And it blew my mind. I was like, what? And I just, you just wouldn't have that insight. And I had a similar conversation about like a remote learning tool, and some college students like totally educated me on how their friends use it, talking about people sharing passwords, watch out for that. And I was like, whoa, I never would have had that. And that's not something you get in like a Kiplinger's or a CNBC, because it's that like consumer, like you're on the ground and you can see it. So I think there's a reason why like Warren Buffett says, invest in what you know, because people do know things about topics that, Wall Street might not have that level of insight into. So sometimes it's like having the confidence to kind of trust your gut. Tiffany, how about you? I know you talk a lot about real estate. You want to talk a little about how you chose to go that route, and how you kind of decide how you're investing in real estate across other things, and kind of spell out kind of your thought process for that?
Yeah, for sure. I agree with Dominique. Like, we can get so overwhelmed with everything, but if we keep it simple, we can still make really good returns and have really good investments. And that's how I've done my investing strategy. And with investing in real estate, I buy properties that are in good condition that I can hold for the long term. So I just buy and hold properties and rent them out. And, I run the numbers and make sure that it'll be a positive cash flow for me. And yeah, I'm not looking to fix and flip a property and have that stress on me. I'm more of just, let's keep it simple. Let's find a good property in a good location. And I rent out the rooms individually. So the more bedrooms, the better. And yeah, I just look for that good property that will give me the cash flow that I want, and plan to hold it for the long term. And then I can just rent out the rooms individually to singles and make a higher profit that way. But yeah, I just keep it pretty simple. And the same with stocks. I look for companies that I'm familiar with, that either I'm using or a lot of my friends are using. And, I can tell that it's going to be a stable company over the long term. So that's how I do my stock investing, is buying and holding as well. So looking for that company that I feel like is going to stay around for the long term, and I continue to invest in that company.
Yeah, it seems like both cases with the long-term approach, you can kind of adopt that keep it simple mantra, because you want to be like, make a good call, but not be in it every day. And I think a lot of people ask too about what's the difference between trading and investing. And that's sort of what kind of the same approach to your real estate situation. Like, what, you want to assess that it's a good opportunity, but you don't necessarily want to be in there every day fixing things or upgrading things. And so That's sort of the difference. It seems like a level of effort kind of choice that you make as an individual of how much you want to really put into it.
Exactly.
On the topic of, I know, Dominique, you brought up investing in companies you believe in. I think this is like a big one. People always ask, how do I know if the company's good? Which I think is kind of a loaded question. I think companies are kind of like people. They're good, bad. There's parts that are terrible. There's parts that are great. But how do you assess that? And like, what are some ways to research to make sure the companies you're putting your hard-earned money behind are actually ones that you know, don't completely diverge from the way you see the world or want the world to be. Dominique, you want to jump in there?
Can you hear me?
Yeah, we can hear you.
Okay, cool. Sorry, my AirPods did something weird. I think you honestly, the way you said it, Katie, like I agree. It's so hard to tell if a company is good or not. It really is. And, you know, that's probably not the answer no one wants to hear. But I mean, even, you know, like I mentioned the Wayfair, you know, the reason I ended up buying puts in Wayfair is because bad news came out about them, right? And I shopped at Wayfair all the time, and all this negative news started coming out that they were possibly doing some really bad things, and it's like, oh man, well that's disheartening, right? All these years I thought they were a great company, and they may be, right? So I think it is really hard to tell what company's good and what company's not, but I think we can, you know, try to do whatever research we can, you know, kind of seeing if there's ever been any negative news about them. But I think it's really hard because you never really know what someone or some organization is doing behind the scenes. So that's a tough one for me to answer.
Yeah, I think it's even harder if you're investing in like a 401k or a mutual fund and you don't see necessarily like line items of the different things. And so you have to do your own research. I know I invested in a retirement account for years. I had no idea what was in it and then I started like peeling back the layers and I was like, oh, like I don't like that one. Tiffany, do you have any thoughts on that? I guess the bigger question too is, can you be like a principled, values-led investor without shooting yourself in the foot? Because ultimately it is about, you know, creating wealth and building a future. So you don't want to completely, you know, miss out on opportunities because you're being principled, but how should someone balance that?
Yeah, I think lately, especially, there's been funds out there that are focused on this, that really focus on your principles. So I feel like there are opportunities to do that, especially now, whereas before, not so much. But it kind of is hard to tell how good the company is. So you do have to do your own research and feel comfortable with your decisions. But I feel like there are some good options out there that could be good investments that would have a good return on your money, on your investment. So yeah, I think it is an option now.
Yeah, I think the funds is a good place to start, and ETFs too, which are just like the basket of stocks that you can buy as one. There's a lot there too. I know there's like we have a gender diversity one on public, and there's ways to kind of, without necessarily doing all the research yourself, lean on like a trusted source. I will say personally, I've done research and there's a lot on the internet too. You can find, there's people who dig up everything. If you want to learn it, you can find it.
And you can also even search like, you know, do a specific search if there's something that you're passionate about, a specific cause. You can actually usually search for mutual funds or ETFs that, you know, are in this respective industry or you know, supports of various causes, whatever no causes are coming to mind, but you can like kind of start and search. There's so many different lists out there for, you know, companies that, you know, have support certain causes, et cetera, et cetera. But you can actually like search for those specific things if there are any like causes that are near dear to your heart.
Yeah, it's almost like there's the what do I not want to invest in, and then like what am I personally passionate about and like more proactive. Cool. Shifting gears a little bit, I know this session is called Money Behaviors, and all experts will tell you that the best way to change your behavior is to form a habit or a ritual. What are some routines, rituals that are actionable that some people in the audience can adopt to, you know, improve their confidence, build literacy? Like, what are some tips you guys can impart that you tell your own clients or that you employ yourselves? Tiffany, you want to jump in first?
Yeah, I would love to. I feel like, yeah, well, I'll share a couple of my own. So like I pay my bills on the same day every month. It's like a scheduled thing in my calendar. So that's a really good way to do that. Take a look at your budget, your bills, what you're paying on the same day every week, even if you need to, but at least every month, and take a look at your investments and everything related to money on a certain day, and just have that scheduled in there and make sure you do that. And there's also, I use an app, it's called Personal Capital, but it just links all of your financial institutions to the app. So any credit cards you have, or if you're paying a mortgage, your checking savings. And you can link all of your accounts to that and just have it in one place. And you can check that every day, just 30 seconds. Pop open the app, make sure any bills are paid, or rental income has come in, whatever it is. But you can really make it simple to keep an eye on your finances. And I think the more that you do that, the better you will become with your money, because you're taking that first step in just looking at it. And when you do that, then you start to think, oh, okay, I spent a lot in this amount this month. Maybe I spent too much eating out, or whatever it was. But you really become familiar with your money situation if you can just form that habit of just checking in on it really quickly every day, or if that seems overwhelming, every other day or whatever, but just schedule that in. I think that will be really helpful. So those are just, a few tips for you.
Yeah, I think staying engaged ultimately drives accountability. I always hear that from people, and just writing down what you're spending, but also just being actively immersed in these things will just make it a better routine. What do you think, Dominique? Anything to add there?
Yeah, I mean, I think Tiffany really hit the nail on the head. I mean, I think just like she said, the simple activity of checking every day is, we're both, probably, we're all of us, and maybe at least me and Tiffany, we're both finance nerds, I'm sure, right? So we actually get excited to check our finances daily and throughout the day. But I know, like, for a lot of our clients, it's hard for them. A lot of times they're only checking their accounts once a week. I think it's really important. I think this is probably one of the most important money habits, is really just checking your finances at least every day, or at least once a week, and being in control of your money. Because if you're constantly checking it, you can tell your money what you want it to do. I tell my money what I want it to do. It's not running around and telling me what it wants to do, right? Because a lot of times people feel like, oh my gosh, I have no clue where my money is, right? So you have to be getting in control of it. So like she said, the app Personal Capital is great. You can use that to link all of your accounts and see how your money's going. I think for me, I know you mentioned you have one day a month where you pay all your bills. I have all my bills just in automatic, right? And I just make sure, a couple times a week that obviously everything goes out the way it's supposed to, but I don't want to sit down and think about it. I just want to have them going on automation, because obviously there's so many bills for the business and bills for personal life, right? So that has been key for me. I think also too, money affirmations. I think money affirmations are great. I think, one of the affirmations I say every day is, I'm a money magnet. I'm a money magnet, right? It's something I say probably at least 30 times a day. And I think it helps you to develop that healthy relationship with money, because a lot of times people, especially depending on how we were raised, we have such negative relationships with money. A lot of us have been taught that money is, the root of all evil and bad. And, if you want money, you're greedy and you're wrong, you're a bad person. And that's not the case. I think money allows you to live the life that you want to live on your own terms, right? My earrings knocking again. So I think it's really important to even, develop and work on that relationship with money, having those money affirmations, checking your money daily, and just really staying on top of your finances is important.
I love what you said about money as a tool, because it just takes kind of the emotion out of it, like that baggage. And it's, like you said, you can take control of how you want to use the tool. Is up to you. It's not controlling you. And just that mindset shift, I think, is helpful.
Yeah.
And so kind of going to that point, I think we'd be remiss to not talk about like everything that's going on now in the world, but in the US. In the US, for our international audience, as you might be following from afar, we're having a bit more challenging times with the coronavirus as other nations, but also we have a weird disconnect right now with the market. And the market, it's been very volatile, but it's kind of recovered a lot since it went down in March, April. But on the other hand, there's still lots of people who are unemployed. There's still people worrying about, like Dominique said before, finances is just so top of mind because it's very real right now for a lot of people. And so even the subject of investing right now for some people might be, that they're not even thinking of that because they're thinking more like what's right in front of them. But with all this going on and, all the other stressors of everything going on, what advice do you guys have for just staying level-headed about your money, staying on your goals, advancing towards your goals in a time that's like very unprecedented and challenging for a lot of people? Either you want to jump in?
I'll jump in. I think Yeah, trying to keep our emotion out of it is really key, especially where the market is so volatile and moving up and down all the time. If we can just keep that long-term perspective and, like you said, keep an eye on our goals. What is it that we are working toward, and why are we working toward that? Is it to make sure that we can support our family or whatever your reason is? But I think remembering that why really brings the motivation to continue to invest, to continue to be better with your money, and keeping that long-term mindset will really help you do that. And, you can just think, okay, here's my end goal. And if you realize, and I think a lot of people forget this, like the market always comes back up. So when it takes a huge dip, it always comes back up. So if we can keep that in mind, I think that will be really helpful too.
I like the idea of starting with your own why, because I think it's easy to compare to other people, and everyone has different goals. Everyone has different situations. And so it is true. You should start with what are you actually trying to accomplish, and then back out into a plan from there versus kind of looking around and seeing, what others might be doing. Dominique, what do you advise your clients on that topic of just how to stay cool, how to just stay sane while keeping up with everything going on?
Yeah, I mean, I think Tiffany again said it perfectly. Like, whatever, when the market goes down, it always, I can almost guarantee it's gonna go back up, right? I think that's what's most important. People see the market go down, like, oh my God, sell. And it's like, no, don't sell. Hold your positions. As long as you have your positions, you haven't lost anything, it's gonna go back up. And I think, like she also mentioned, is keeping your goals top of mind. It's what's very important. Even as this pandemic started, I shifted my goals and changed them up a little bit and make sure I'm looking at them every single day and making sure that I'm taking small action steps daily to hit the bigger goal, right? I think that's what's also very important. So, like she also mentioned, keeping your why at top of mind, and don't freak out. Like the market, it always goes down and it always goes back up. Historically, it's gonna be up. Don't worry about it. Like just don't worry about it.
Okay, and then I guess the last thing is a little more tactical, but always get the question of like people wanting to know, what are the experts reading, consuming? What did they read in the past? What materials, resources that they kind of used or used in the past to grow their own kind of confidence and build their literacy? So super curious. I'll start with you, Tiffany, but like what media are you consuming? What books do you advise someone at various levels? Like what do you recommend?
Yeah, when I first read Rich Dad Poor Dad, I loved that book, and it just got me thinking about so many different things I could do with my money and how important it was to make my money work for me instead of just keep it in savings. So I really like Rich Dad Poor Dad. I know that's a really popular one. And I also love the podcast Choose FI, Choose Financial Independence is what it stands for. They just share a bunch of people's stories, like their own paths to financial independence, and they share tactics and they have a whole community. So I love that podcast as well. And just some reference to internet sites. I like Investopedia if I have a question, or The Motley Fool. I think it's called fool.com is their website. So I look at those. And in doing this, I try not to consume too much media because it's just overwhelming and there's so many different opinions and things. So I think if you can just find, one or two sites that you find really helpful and you can relate with whoever's, teaching the content, is a really good idea, so that you don't feel overwhelmed and think you have to look at everything, because you don't.
Yeah, there's definitely a lot of resources out there, and it's never been easier to kind of self-educate. I got to plug Finimize here because I think their newsletter, it just, all of this craziness going on, it just kind of brings it down to like the same format every day. Read it in 5 minutes. There's no like flashing red banners on the screen. No one's yelling. And for me, and I know a lot of their audience, it's that one like, okay, I'm going to stay informed. I'm going to take it in, and then I'm going to, move on with my life and not have that kind of anxious feeling. How about you, Dominique? What resources do you love for, just overall personal finance, investing? What do you recommend?
So one of the first books I feel like I read on finance, and I don't even know if these are still around, but the Dummies books, it was called Stock Investing for Dummies. My grandfather bought that. I gotta see if they still sell those on like Amazon, but it was like the best book when it came to basic just investing, and that's what I was reading when I was in high school. But now I really love Investopedia, like Tiffany said. So when I first really wanted to get into investing, that was literally the website. I would just read every single thing on the Investopedia website. And now for news, I make sure I have the CNBC app and Market Watch. I get alerts throughout the day about things that are going on in the economy and also in the market. It also will send me, alerts about various stocks that I'm watching, which is really great. So those are the things that I'm, really read in the past and using now to, keep me abreast of like financial decisions and investment decisions.
Great. I think we wanted to save some time for audience questions. So maybe I have one more short question while we're kind of pulling those up. And that would be, we ended our survey just asking people like, how do you feel generally about what's going on in the economy, in the market, in your own situation? And a lot of people said they were optimistic. Some people were pessimistic, more people said optimistic. A good chunk said no change, which made sense because most of the people who took the survey said they were more longer term focused. So to you guys' point, over time, the market has gone up, and so they're kind of banking on that holding. But just out of curiosity, how would you rate your optimism, confidence right now as you kind of look at everything going on around us? Tiffany, you want to go first?
Yeah, I'm a pretty optimistic person in general, so I'm still optimistic even during all of this. And part of that has to do with the long-term mindset, like I had mentioned before. Just, yeah, keeping your focus on that long term and knowing the market will come back up, the economy will pick back up. And it may take a while, but I'm still optimistic about it, and still holding on to my investments and investing. And yeah, and kind of to go back with what Dominique said, like your affirmations that you say and your mindset is really important. So I think if we, I don't know, can have that positive or optimistic mindset, we will do better as investors, and we'll do better with managing our money if we're able to do that.
Cool. Anything to add, Dominique?
Second all that, yeah. I agree.
We have some really good questions in here, so we'll try to get to as many as we can. One I see popping up a lot is asset allocation. And are there best practices, resources for navigating that, where you're putting money, stock market, real estate, crypto? Our survey showed more people were investing in crypto than real estate, which was wild to me. Obviously a more digitally savvy audience. But for you guys, is there like a best practice in terms of how to split that up, or does it really depend on the person?
I think it depends on, I think it depends on the person, and I think it depends on like how much, what your income is, how much you actually have available to invest. I say if you're in that 30-ish range, or, early 20s or late 20s, most financial advisors are going to recommend like an 80-20 allocation, with 80% in stocks and ETFs and mutual funds and 20% in bonds. Or bonds can be, to me, that 20% can be bonds, crypto, things of that, gold, things that have like that more of a, I don't want to say hold value, but do kind of hold value and aren't as volatile. So I think it really depends, also too on your income and, the debt that you have. So it's hard to say, but, depending on your time, your age range, during those 20s and 30s, those people will recommend an 80-20% allocation for your personal portfolio.
Cool. Anything to add there, Tiffany?
Yeah, like she said, it kind of just depends on the person and what you feel comfortable with. If you are going to be 100% in stocks and then you're going to sell when the market goes down, then that's not a good place for you to be. So it kind of depends on your comfort level. And like she said, the recommendation is 80-20%. I am more so in stocks, but that's just my comfort level. I feel comfortable being there. So yeah, it kind of just depends on the person and if they're going to sell if the market takes a huge dip or a big crash.
Yeah, building on that, someone asked a good question, which I always hear too. It's how do you set an exit strategy from stock? So how do you know when to sell or take a profit? I was actually curious about this yesterday and asked one of my friends who's more well versed in this stuff. But I own some Shopify stock. Again, this is not financial advice. I'm not an advisor. But yesterday it hit an all-time high, and I was like, okay, I have a little profit. I didn't know how much. Was it a good or bad idea? Can either you like help people understand like when it makes sense to get out, either because you want to take a little profit or because you want to cut your losses? And like, what are some tools or resources for making that decision on one's own?
Yeah, I mean, I think it depends on what I like to set profit targets for my investment, right? So if the goal is, hey, I want to make $5,000 for this, then that's the target that I'm aiming for. But it also depends on your time frame, right? So like you said, you purchased Shopify stock, and yes, Shopify may have hit an all-time high yesterday, but think about, I remember when I was in college and Apple hit an all-time high of $90, right? And it was like, oh my God, and I sold it, which was stupid, right? It was not a good idea because I sold it and it just continued on about its way. So I think you have to kind of figure out what your time frame is and what you need your funds for. So if the goal of your money is a longer term investment, then yes, if Shopify hit an all-time high today, that's great. But your goal is, if your time horizon is 10 or 20 years, then you may want to leave it in because you may want to ride it on out with Shopify for years and years to come. So I think it really, and I hate giving the answer like it depends, but it does depend. First, it depends on what your profit target is and also what the goal of your investing is.
Yeah, I think it goes back to knowing what your goal is, like at this level too. Like if you don't know what you want to do or where you want to go, it's harder to make a decision. Yeah. Here's a good one. How do you get the confidence to act on a hot take or a belief that others might not have at a particular moment? So if you're like Dominique, you had that example, you saw something, you had an instinct. I think they're asking like, how do you know that instinct is right and you should follow it? And how do you get the kind of gumption to act on it? Any tips there?
I would just say real quick, I think you have to go with your gut. I think a lot of times we don't give our guts enough credit. So in that situation, I went with my gut and also determined that the financial risk was worth the reward. It was money that I could afford to lose if it didn't pan out the way that I anticipated. So those were some of the things that I thought about when making, let's say, that one specific investment or investments in general.
Yeah. This next one's about real estate, so I'll throw it over to you, Tiffany. Real estate is scary to me as a 25-year-old, which was the age that you mentioned you had bought your first property. It just feels so big and so permanent. How do I understand those opportunities, get more confident, and what are like the pros or cons, renting, buying? I get that. I think real estate just feels different, even if it's a similar kind of investment, because it's so physical and real versus kind of all this other stuff in the cloud. How do you think about that?
Yeah, that's a great question. So the way I try to look at it is I can buy and hold this property for the long term. So I'm not trying to sell it really soon. So if I can kind of take that perspective. And then also I was single, well, I still am single, but single at 25 when I bought my place. And so I had roommates living with me to help cover the mortgage. So that kind of made it more comfortable as well. So if you could rent out the basement maybe, and maybe that can help you have a little bit more confidence, just helping or having someone help cover that mortgage payment, that would help. But looking at the property that I bought at 25, I knew I could rent that out later. So if I wanted to move, which I did move out of that property, and I'm now renting it, if I can take that perspective as well and think, okay, well, maybe if I don't want to live here forever, I could still rent this out and move somewhere else wherever I wanted to. So yeah, just kind of taking that longer term perspective and, and also realizing, that it's not the end of the world if this isn't the best property or whatever. You just have to take that first step forward and continue to move forward, and you'll learn as you go. But you know, you can do your homework up front and make sure you feel comfortable with it, and then, you know, actually take the step. And I think that brings confidence as well.
Yeah, I think that there's always a degree of like risk with any investment. So it's knowing your own risk tolerance and kind of understanding that going in. And similar on that similar topic, someone asked, which I think is a big question for a lot of young people, especially, how do you balance investing and taking on a little risk proactively to build that wealth over time with loans? And I assume this person's talking about student loans, which might not be as big of a thing in other countries, but in the US is a huge, huge issue because a lot of people are coming out of school and they have all this debt. So they're paying monthly payments, and that's going to paying off the debt. Everyone knows it's not, you don't want to be in debt, but then it's, you know, you also hear all of these great things about investing. And so do you all have experience talking to people who are balancing the two, and how should people think about balancing the two? Is it about knocking the debt off first? Is it a mixed strategy? How should someone approach that?
Yeah, I don't think you should ever let, you know, debt hold you back from making money, because essentially if you could be missing out on opportunities to make more money to pay the debt down quicker, right? So I think obviously there has to be that balance, but I definitely think it's really important to not miss. But I think a lot of times people are like, oh, I can't invest until I pay off my student loans, or I can't buy a house. And I'm like, well, you could also invest and make a decent amount of money to knock those student loans out quicker, or you could, you know, have your real estate working for you. So I think your money should still be working for you even while you're tackling your debt.
Yep. Anything to add, Tiffany?
Well, yeah, just to add to that, if it's a really high interest debt, you may not be able to make that return back on your investment. So if it's high interest, you may want to pay off that debt first and then start investing. And on average, the stock market returns 8%. So you can kind of use that number. But yeah, you have to feel comfortable with your investments as well. And, you know, if you feel like you should pay off your debt first, then that may be the right path for you. You know, like Dominique said, you have to trust your gut. But that is one way to look at it. Take a look at the interest rate, and if it's really high, then probably pay that off and then start investing your money.
Yeah, I think that hits on an important point, that like everyone's looking for the magic bullet, but it is different for everyone. Everyone has different circumstances. Everyone has different goals, different risk tolerances. And so it's almost more about understanding what's out there and versus kind of following one clear rule. It's about building your own sort of path. And so on that note, I think one kind of big question I think we can end on, which is a great one, is what would you say the biggest lessons you've learned so far in your journey, either on a personal level or professional? Are there any kind of big pieces of advice or like mistakes you made and learned from along the way that have stuck that would help the audience? Either one of you have anything come to mind?
Yeah, I would have to say patience. Patience is extremely important. Patience, and I'm also a new mom as well, so I'm really learning patience. But I would say patience is really important when it comes to your career goals, when it comes to your investment goals, when it comes to, you know, physical goals, whatever it is, right? It's really important to just kind of slow and steady wins the race, be patient. You know, an investment may not be going the way you want it to go, but sometimes if you just wait a couple extra days or a couple extra months, it'll go where you need it to go, right? So I think patience to me is the key to like life.
I like that a lot. Tiffany, how about you?
Yeah, I would say investing earlier is probably one of my biggest mistakes. So the earlier you can invest, the better off. And invest early and invest often. And you can start really small. There's, you know, apps that let you buy a partial share of a stock, or you can just invest in an index fund. So you can get started with not that much money, but honestly, investing as early as possible will make such a huge difference because you'll see that compound interest grow over time.
And the earlier you start investing, the less you have to invest. So
lots of great calculators online. I remember hearing about compound interest, and it didn't actually like hit me in the face until I I downloaded one of those calculators, and I was like, whoa, they're like small differences back in time, over time magnify. And sometimes go play with one of those calculators, because that's what really clicked for me. It's pretty powerful stuff. With that, I think that's it for the panel. I'll throw it back over to Michelle, but thank you guys so much for joining, and I hope everyone's staying safe and healthy, and this is a lot of fun.
Great. Thanks, Katie, and thanks, Tiffany and Dominique, for speaking. Thank you, everyone, for joining today. And as I mentioned, we're going to send a follow-up email next week. So we'll speak to you then, but see you at the next event. Thank you, everyone.
Bye.
Bye.